Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is December 19th, 2018. A lot of activity, obviously, with a lot of different markets, but the one I'm going to look at today is crude oil. The ETF right now is SCO. And the reason for that, there's a number of things that have popped up just recently. So we'll go through that. All the trends are pointing to the downside. No major surprise there. The technical rating is still negative. The seasonal tendencies are still pointing to the downside, but they are basing. And then we've just recently had an elastic pivot low, and we have a sub low that doesn't always occur. But with the power level, it's something that I want to at least address, just another indicator that we have. And we also have a support gap. So there's a number of things that are really popping up here. If we take a look at the deep dive and we look at some of the other indicators, nothing really showing up here as far as the daily alerts. So this is something where we're going to need crude oil to really base here for at least a little bit. If we take a look at crude oil itself, you can see that we're still short the market with three different systems that are still out there, but we did liquidate a position today, and I just want to show this to you. We have a trades list. If you haven't seen that, you should really take a look at that, where we have the entry and the exit signals, and here's a short that we liquidated today with a nice little profit. So you can always come to the trades list. I'll show this to you where you can find it. You go to signals, recent signals, and then the trades list, and you'll be able to see entry and exits. Now, if we take a look at, and I'll do this real quick here, we're going to look at the seasonal chart here for crude oil, and you'll see that it's in an accurate phase right now. And if we look at the 10-year chart in specific, you'll see that we're really coming down to a basing here, where with this action today, we usually see a little bit of a bounce here to the remainder of the year for the most part. So the support level that we're toying with right now could be the base that we're looking for, but bear in mind that any little pop that we do see for the remainder of the year, whether it's on the 5-year chart or the 10-year chart. The 10-year chart's a little more pronounced to the upside, but do realize that the market can actually show up here on the downside, where we'll actually have a little more of a sell-off going into January. So keep this in mind with the short positions and the covering of positions. And if we actually take a look at the market itself, here's crude oil, daily bars. This is the support level that we had been at, and we broke that pretty violently. And so the level of support that we're kind of looking at right now on daily bar basis, really have to go back here. I had to scrunch the chart up a little bit just so we could go back to find where the next major support level was. And that level is either 45 and a quarter, and this one up here, which technically is at the support level, that's an even 48. So between 48 and this 45 and a quarter, that's where the market should be basing. The fact that we have an early warning signal on the elastic level, we're getting into a quiet phase, which is what the energy level looks at, and we have that sub low that actually occurred here. There's a little dot right here on the power level. There's enough that's really kind of giving us an indication that the market is looking at kind of slowing down the sell-off that we've been having, and it's been pretty dramatic. The other thing I'll show to you now, this will obviously change because the market bounced up just a little bit, but if we come back to the website, one of the fun things I like to look at it is a distribution. So if you come to performance, distribution, and we come to weekly, and then do a CVAR weekly comparison, the chart that we're going to look at is not updated with today's action, but I do want to point this out. Here's crude oil right down here, where yesterday it was down 9.55% for the week. Obviously, we're still in the midst of the week, but anytime you get over 8.62% for a down plus or minus, but in this case down move for the week, that's pretty dramatic. And usually the market through mean reversion wants to bounce back up. So with today's action, it did bounce a little bit. We'll see if there's any follow through based upon those seasonal charts that I was referring to, and the fact that we unwound one of our short positions, that the market theoretically could have that little December bounce. And we'll see if there's any follow through into January, but do realize that typically there is still a little more sell off in January as well before the market goes into its next phase. So a lot of action obviously in crude. We've been enjoying that sell off, but because we had a number of little things that were popping up, here on the elastic level and the power level. It gave me a kind of a clue that I wanted to at least talk about that particular market. So we will see what we can do with some other markets here and see how the systems react to the potential basing that we're seeing here in crude oil, and see as we're out the systems take additional profits here in the coming days. So with that, thanks very much, and we'll look at some more markets soon.